Hey everyone, up next is a conversation I had with Clay Robbins, formerly of Snow, currently of Coliseum, and Christian Catalini, who is a storied guy in the history of crypto. He did a bunch of the original Bitcoin research at MIT as an academic way back in the day, got pulled to the dark side. Working on Libra DM Facebook's crypto stuff, which is where I got to know him as an advisor, and has since moved on to be the chief strategy officer and co-founder of Lightspark, which is doing some interesting stuff in the space. But he's one of the smartest guys thinking about and doing research around the Bitcoin world and stables, and has been for a long time. Hope you enjoyed this conversation with Christian. All right, everyone. Are we talking stablecoins?
Yes.
Excellent. Christian, it's good to see you.
Likewise.
So, guys, what the fuck is going on in the world of stablecoins? Sounds like you already got into it, but give me the scoop.
Sounds like things are getting real, after incubating for a long time in the fringes of crypto, and everyone wants a stablecoin and wants to use them. Sometimes they may not even know why.
So yeah, back up, Christian. Clay, you've been around this forever. I've kind of been around it tangentially forever. Christian, you've been around it forever. You're hanging out at Lightning Labs, trying to help David Marcus and team figure out this world of this stuff. But give me the bigger picture. Everyone's been talking. There was an era when everyone thought people were just going to transact everything in Bitcoin, right? And it was that was kind of the original thesis. And it was well, it's hard to know if you're going to pay for a coffee. 1 second, it might be worth X in Bitcoin, and the next Y in Bitcoin, but it doesn't matter. Turns out it matters a lot. Too hard for people to think about. So people started talking about stable coins. It is well, we'll just have some sort of US dollar on-chain colored coin thing. This has been a long time conversation, but it's always still been pretty intellectual for most people. Stablecoins have been very useful for moving between exchanges and things like that. People think about storing money on-chain to use later, but in terms of people transacting with it, it's still been pretty intellectual. It does feel like that's starting to change in a bunch of ways. You're seeing consumer apps sending, people sending various stables around. You've seen a whole debate about, do you just need a US dollar stable coin or local stables or all that stuff? But it does feel like it's going from intellectual to practical. I'd love, both of you guys, but Christian, you in particular, give an overview of what is actually happening for real? Where is stablecoins actually being used now, and kind of what the current state of the art is from a development perspective?
Look, as it often happens, I would say the hype precedes the reality here, in terms of yes, we're witnessing a transition from a crypto niche to more mainstream. But it's the early innings of that. I would estimate no more than $10 to $30 billion in payments every month are kind of stablecoin powered, at least of what we would consider traditional payments. So think about a business moving money across borders, someone trying to send a remittance, a merchant trying to get paid. There's a lot more volume in DeFi or trading, and that's kind of all crypto native. I would say probably the event that has changed everybody's mind was Stripe's acquisition of Bridge. It suddenly brought it into kind of the mind of everyone, which is okay, so a player like Stripe, which tried to do crypto before, is now making such a big bet in it. Maybe it's time for the technology to go mainstream. That said, I think it's still going to take some time. It really depends on what the use case is. So if you're using a stablecoin for accessing dollars abroad, that has massive product market fit. And it should not come to us as a surprise, right? There's lots of people around the globe that cannot hold US dollars, cannot bank with JP Morgan. And if they can get even a little bit closer to that, doesn't matter how many hoops they have to jump through. And in the past, we've seen a stablecoin like Tether scale really well in that use case. That's a massive plus. Then there's the use of stablecoins almost like a pipe. I'm trying to move value and I'm going fiat to stablecoin to fiat, what people colloquially call the stablecoin sandwich. I think that's more nascent. That you can do also with Bitcoin. In fact, at Lightspark, we've been doing the exact same flow, not with a stablecoin sandwich, but with a Bitcoin sandwich. And then it's a game of how much liquidity do you have on each end? Can you perform that conversion on either end efficiently and in a way that, doesn't have too many costs, although you may be removing some intermediaries.
Got it. So how do you get, Clay, I'm kind of curious, what are you're working with a bunch of builders, right? And people are actually, what are their use cases for stables that are practical? Where does it happen? People talk a lot about, I want to do payroll. I want to do Venmo globally, but what's it getting excited, and where do you actually, given that it is still early, although exciting, where do you see things moving?
Yeah, I mean, I think that it gets to the heart of the jurisdiction-specific risks, right? With building a fintech today, practically getting to different markets very, very quickly is one of the biggest levers that it has to pull, that stablecoins enable, right? Which is, can you get from the US to Mexico to the Philippines, all dollar denominated tomorrow? And a stored balance in, a fintech app is the only way to do that functionally and in a capital efficient way. And so to me, that's probably the number one early stage utility. But I think that, more broadly, this has been sort of the trend in payments for a long, long time, where we've moved from FTP systems that take 5+ business days for settlement. Now you have sort of FedNow and a progression towards what you would call real-time payments. But a lot of it requires different chutes and ladders in different jurisdictions. And stables just offer a better piece of infrastructure to get to market across jurisdictions tomorrow. And so that's the main thing that we're seeing
So I
is
get it, but
just
just
experimentation
can
there.
you be more like, I get that we always see experimentation. Why do I actually care? Like, I understand in theory I can go from place to place. It's easy. I've experienced it. You're like, wow, this is great. I can sit in whatever. I can send my friend money in Mexico and like it shows up in 2 seconds in his,
Hmm.
wallet. I get why that feels good. But then you get to the practicality of it, like how often do I actually need to send money to someone in Mexico? And then you get to the practicality of like, yeah, there's a big remittance market, but it's like the most risk averse people in the world, right? So they're happy
Hmm.
to pay Western Union a bajillion dollars and be slow because they don't fucking care because they know like it's worked before. And they're very scared of losing their paychecks. Like I'm kind of
Hmm.
curious of like people are like, oh, I can like hire someone in Lithuania and pay them instantly. He's like, you can, like that's cool. Like, but like, what's actually happening?
I mean, I think B2B corridors, and to Christian's point around the bridge acquisition, that's one thing that Stripe looked at and was like, oh, this is a massive artery of payments volume that we're not capturing today that we can easily capture once we buy this stablecoin orchestration platform, right? Where if you're acquiring, if you're SpaceX, for example, and you're paying for raw materials acquisition in Kenya, right? Today, you're taking on that FX risk, you're taking on the latency risk, you're taking on the last mile payments infrastructure that you have to set up to pay that supplier. And so if you're the CFO, it just works is kind of the upshot, right? And it has sort of these tail benefits of not having to manage FX risk across multiple suppliers. And so that is one corridor where you can see the benefit not only for large enterprises, but all the way down the stack to smaller SMBs. On the consumer side, yeah, to your point, remittance, like that's been a trope all the way dating back to the advent of Bitcoin. But I think the B2B case and the bridge acquisition, I think, been what's pulled this forward so much so quickly.
More generally, and I think Clay, you were hitting at this, which is this is allowing for a much more modular fintech stack. So you get a bunch of new Lego blocks, whether it's like moving value, doing on and off ramps, and entering new products and services for a fintech, for a wallet, for a player in a completely new way. And it's starting to happen, right? So you're starting to see players that are trying to build a global Venmo in a way that in the past would have been much harder by putting together the pieces that have been kind of deployed by others. And so that's the part that I'm most excited about. I think it's still early, but I think you'll eventually see entrepreneurs really build new types of products and services all the way to consumers and businesses by just building on infrastructure that others I've kind of put there out in the market. And yes, right now, I think, Sam, you're absolutely right. It's still kind of clunky and it feels like, you're driving your car on a road that's meant for a horse. But in that infrastructure inversion phase, I think we're starting to see the glimpses of, okay, if you can put an on and off ramp in this region, maybe because they have a great real-time payment system like Pix in Brazil, UPI in India, Pay in Mexico, that works really well domestically. You glue it with something, can be real-time like Lightning or some other network, and the value can move all the way to the US and eventually we'll have FedNow. You're connected to countries that otherwise don't have a way to speak to each other in real time. And you can start building new types of products and services. That's the part that I think is exciting.
There's also the geopolitical aspect to this, which is like, in the battle lines that are being drawn between, the US and China in terms of, chips, onshoring, what does dollar hegemony mean in this era of BRICS, et cetera, et cetera. Like any risk to dollar hegemony needs to be taken seriously by the US just as like a national security risk factor. And so winning the war in terms of the new substrate where prospectively tons and tons and tons of payments volume and economic activity can move is extremely important from a policy perspective. And so I think that's the other thing that you see getting pulled forward here as sort of the tick, tick, tick of payments volume on stables has continued to grow. And people see the abstract of some of these promises that we've discussed. It's become, a policy agenda issue in the US in the broader spectrum of these battles across different nations.
Yeah, you almost have two separate blocks, right? So you have the Chinese central bank digital currency. Maybe the Eurozone will eventually have a CBDC if they get their act together. You have bureaucrats in Basel thinking about how to connect these different CBDCs, which is probably going to take another 20 years. Or you have kind of the private sector driven. Here's a robust framework for issuing these dollar, denominated assets. And of course, there's a lot of work to be done there. That's why we need Congress to really come up with rules. But once you have that, then people can just go build all around the globe. And I think that's an approach that looks a lot like the early internet.
Yeah, I guess like cynical Sam is just like not because I'm like guys, I'm on team crypto in general, but I'm also on like team realism. Is like people talk about like then you just go build and like it's stuff still all just seems like pretty abstract to me in terms of like what you build that really really matters. You know what I mean? Like and like it's just an interesting thing where you're like you could hire a bunch of people internationally, sure, like but if I really care, I can already do that, right? So like what's the thing that gets unlocked where all of a sudden it really matters? Or it's like I can buy a bunch of raw materials from Kenya, but like I don't really need to. And like the bigger problem with that is not the remittance. The bigger problem is like the customs and actually getting it here. You know what I mean? Like I can
flip the perspective, right? So now you're a designer in Latam and you want to get paid right away at a very low cost. Or you want to hold your savings in a USD asterisk bank account. That doesn't exist right today, or it's heavily constrained.
Yeah. The hold account, the hold American dollar account thing I get, right? It's kind of funny because it crosses against the dollar hegemony thing. And like I think one of the biggest things obviously that's going on is like local stables and things like that. But like, fine, I get that. I'm a designer in LATAM. I mean, Christian, aren't we like months away from there never being any paid designers again anyway, from with AI?
We'll have to keep moving up the value chain, right? Hopefully.
Yeah.
All of us.
Yeah, it's just an interesting one. It's an interesting.
AI agents might need crypto anyways for
that
their
for
own
sure.
dealings.
I mean that's again like not to be a cynic, but like that's a narrative that's been going on for 15 years, right? This is the whole like self-driving car has its own wallet, pays for its own repairs, junks itself when like da da da. Yeah, sure. But and like I actually believe that agents with wallets is like actually an interesting thing that's going to happen at some point, right? Like it might actually be more practical than people realize. Interesting. What about like what's going on with like local Clay? What's going on? You and I have talked before about like local stables and like the kind of shift from all you need is a global USD stable to like local stables. Like I'm curious what your both of your takes on like that trajectory.
Yeah, I mean, I think it's going to happen, right? Because you will continue to have these issues of in brick and mortar locations in different geographies, you're going to want to pay with the local stables unless you really do get this sort of two-sided marketplace across merchants plus consumers being willing to transact in dollars. But like, I don't think that becomes a reality tomorrow. And so you see different institutions, both upstarts and incumbents saying, hey, it makes sense for us to use the credibility and the licensing that I have in market to launch a stable asset. And I think the other thing too that people are seeing is, especially in a high interest rate environment, it's a fantastic business just in terms of the net interest income that can be generated. And you see like the capital efficiency of like USDT and Tether, and they're an 11-person team generating untold amounts of money for that head count. And so I think people see the near-term opportunity with interest rates pinned where they are. And I also think too, there is a promise of bringing down spreads across different FXs. There are a couple of stable issuers that are looking to create these sort of liquidity desks for different FX pairs. And so there's a benefit there as well too. But does this change the trajectory of any one specific currency that isn't, part of whatever G7 that are contending for supremacy? I don't think so. But it is something that people are putting a ton of resources behind to bring to bear.
Fair enough.
Yeah, I would say we're super early on local stables, and often the liquidity isn't really there. And it's not surprising, right? Again, the use of the dollar as a store of value that's on chain is super compelling right now, and it's driving most of the interest in stablecoin and the volume and the balances. But as the market develops, like think about also lending and credit, right? You will want to borrow in your own currency, otherwise you're going to take massive currency risk. And more generally, what I love about these local stablecoins, once they're properly implemented, they almost become like open interfaces for an entire country. So if now I'm a fintech and I don't have the resources to do my own licensing and get my own payments integration in that country, if there's at least one legitimate stablecoin, say doing Mexican peso, I can use that as my interface to that entire user base. And so that's where I think we'll see more exponential growth of all of this. Again, super early, and it's going to take time and regulation. So we're talking years, but it's going to be good.
Yeah.
Wait, like, do you think that like all fintechs just become worthless because of this? Like, I mean, like, this is like, I feel like all of these like fintechs in various countries, right, have they're all kind of like regulatory capture. This stuff is high friction. Do you think they just get blown away by if stable coins actually get good?
It definitely collapses the back end of what created differentiation from an IP perspective with fintechs. And so, yeah, it definitely puts the onus on distribution, brand, and cost of acquisition. And so, like, there is a world where this trends towards, the same lesson that many fintechs have learned that have tried to compete, in places like the US, which is, okay, yeah, you can't really offer differentiated services, but you have a nice brand that looks great to millennials and Gen Z. But guess what? You're going to end up having to compete on CAC with Chase and B of A, and you lose that battle 10 times out of 10, right? And so I do think that that's the big thing that's playing out here.
Completely agree. And to some extent, if you play it forward, maybe we will see the emergence of the first truly almost semi-global fintechs, right? Some of them have gotten there, but they always encounter friction, and it's very balkanized at the end, whether you're looking at neobanks or any other segment. I mean, this is going to be a stack where somebody starts growing well, they could get a lot more of the pie.
Yeah. And back to your question on local stables, I do think that there's like a sub narrative as well too, which is stablecoins are kind of the Rorschach test for whether the issuance of a stable asset in the local currency is a better tool for facilitating seamless economic activity, or for governments to surveil their population and institute capital controls in a more perfect way, right? A seniorage tax on your checking account is easier to do in stables than it is with clunky legacy infrastructure. And so I do think that is, kind of in the abstract of the West versus East version of this geopolitical tension. I do think that that's another component at play here. Is it better privacy, more seamless, lower cost transactions, or is it really just a better tool for control and surveillance that we haven't had?
Taxation is going to be another
Well,
angle,
that's always
right? Which is
yeah. All things are usually cause their inverse, right? They end up being used for the inverse of what you expect them to be, what you intended them to be used for. So that's one of the lessons of history: unintended consequences. Cool, guys. So, like, I guess the question for you is, like, I'd love like an over and under in the spirit of pithy podcast content of like, it is May 2025. What's the over? What's the thing you're most excited about that's practical development in stables? What are you most worried about? What's your over? What's your under on the whole space?
Go ahead,
I
Christian.
can start with one of the things that I'm pretty sure. I think issuance is going to be a lot more complex and less profitable than people think. Right now, it looks very appealing. It's kind of a duopoly, but I don't think it's going to play out the way of the card networks. There's just too many participants across the fintech and the crypto space that will want a piece of the pie. And so if I were an issuer, I'd be very worried about what's my strategy for kind of long-term sustainability of what I'm doing, unless I become kind of just a commoditized complement to something else.
Yep.
On the other front, on something that I think people are not paying enough attention to is kind of the shovels. And a big one here is identity. And how do you close the gap between crypto and more traditional payments? There's a number of pieces that are not there yet for this to kind of, go head to head with the traditional banks and traditional financial institutions. I think whoever gets that piece right, especially in a way that's privacy preserving, that's thoughtful, and delivers a great UI UX to consumers, I think it's going to make a lot more money than the issuers or many others that are rushing into the gold rush.
Fair enough. Clay?
Yeah, Christian kind of stole my point on the issuers, but maybe
That's why I tried to go first.
the version that I would actually append to that is, when companies like Square kind of came to the public market via IPO, there's this narrative around like, oh, this is just a commodity payments business that's going to be subject to margin compression, yada, yada. But the fact of the matter was like, no, there are tons of layered services that you can build on that payments data that actually serve to combat margin compression. And I think the same thing has to be played out on, I think, a longer time horizon for the issuers, which is, yes, if you assume that the commodity business is the issuance, and especially as interest rates titrate down, you need these value-added services that make use of that existing infrastructure to actually build a sustainable business for the long term. So I do think that that's going to take a longer time to play out than people think, but there are people obviously actively working on that.
Well, but just to push you, Clay, I mean, just Block, Square, or whatever, is basically trading at its 2018 price, right? From a value perspective. So sure, it's up from IPO a bit, but like it's like not like a great success story of like, oh, you thought this was commodity, but it wasn't commodity, and we layered all this stuff on. It's like you've traded flat for 7 years, right? Because it is commodity, right? And so like I guess the question for me is like, do you actually
Well,
believe that, or like
I think
what
that's
like what's the
yeah. I mean, as a former employee there, I mean, I think that's more a commentary on them missing the window on e-commerce and the payments API piece, which, you know, obviously Adyen and Stripe are getting a premium as a result of that. And we love Bitcoin and Lightning, but I do think that they have kind of missed the boat in terms of the window of opportunity on stables, specifically because they have been so overly focused on Bitcoin as sort of their only sort of almost religious play on the crypto angle. And so, you know, I think the market maybe is right sizing it, you know, in terms of where their payments volume is coming from. But I do think that there are services that, you know, certainly help to combat margin compression in a big way there.
Fair enough. Fair enough. Well, guys, it's an interesting world. I mean, it's like I try to run this line of being like fundamentally an optimist, but also like skeptic on like where we are and some of this stuff. The good news is like, look, I'll be the first to say like it is amazing that you can now send USDC easily in like a good interface to Clay, to you, to Christian, like immediately, right? Like it actually works, right? Which is pretty sweet, and like was not how it was a while ago. Like it's now, but on the flip side, it's like one of those things you get into like the big chess move pieces. You know, I always just go back to the full question of like, what am I doing with this that I fundamentally need to do or really want to do a lot that I'm not doing already, right? And like it is sometimes hard as a 40, almost 2-year old that's been getting old and boring to like figure out what those things are, because I'm like, these things kind of like, it's not that they're great, but like they work fine. Like, you know, what's the real thing? And maybe it'll be autonomous agents, right? Maybe it'll be, you know, but it's an interesting problem, right? When you're just like, yes, like there clearly is like a better way to do these things, and stables are really interesting, and there's volume here. But what's the point?
I think it varies a lot by where you are, right? So we have a very well functioning financial system. We have like many ways to pay and get paid for things.
Yeah.
But that's where you're seeing most of the activity in Latam, Africa, pockets of Asia, right? So those countries are leapfrogging. So I think there's more upside for them. But even to your point about AI agents, like, yes, I mean, we've seen API and SDKs from Visa, MasterCard, Stripe, and PayPal, right? So it's not that decentralized solutions will stay on the sidelines. And so maybe stable are, you know, the best way to provide a wallet to an AI agent, but you bet that every large player will also try to do it the old traditional way, and they bring distribution and scale. So I would say that probably the part that the crypto enthusiasts have left aside for the last few years, and especially now in this stablecoin gold rush, it's like distribution is going to be king, and it's nothing new. There's nothing magic about crypto that makes the distribution easier, unless again you're giving everybody a dollar bank account, which is kind of what Tether has been doing really successfully around the globe.
Fair enough. Guys, well, I appreciate you joining and bullshitting with me on this so that GG can cut it up and make little social media clips of it. So this was fun.
Yeah.
You good, man? Are we gonna hang out this summer?
Yeah, we should.
Cool. I'd love that. And Clay, I'll see you when I see you.
Yeah. See you soon.
Thanks, guys. We hope you enjoyed this conversation. This is the general outro where we say, like, comment, feedback, share, send us notes. We don't care if you disagree with us. Peace.